Good morning, everyone. This is Brad Matheny. Today's the 18th of December. It is Wednesday. Happy Wednesday. About a week to go. A week from now will be Christmas Day. Can you imagine? And we'll all be kind of taking a break from the markets, hopefully. But we are still dealing with the markets right now. And we are likely rolling downward. That's the SPY daily chart right now. Let's take a look here. We've got a gap up lower pattern in counter trend. So we need to see how this sets up. We are in a bullish trend. We had been in warning trend before. So we're moderate bullish. I do believe that we're moving down, like I told you last week, into this downward cycle here. I think the markets are going to revert at least back down in this 590, 592 area, kind of right over into this low right around Christmas. I think it's natural. I mean, we've seen these reversions here. Let me minimize this a little, get it out of the way. So we've seen these types of reversions, a gap up, a roll down, and then a gap up, a roll down, and now a consistent rally. Would not be surprised to see a roll down. These downward trends typically are about 2.5 to 3.5%. So stop extending. So, having this same type of move over here, a little 2.5 to 3.5% pullback, puts us right into the 591, 592 area. So I'm pretty confident that we're going to get some kind of a roll in price here, maybe related to some surprise event from Joe Biden or some fallout with the general market. I mean, I think it's just kind of an unwinding period, a reversion period moving downward here. Now, on a second list, we need to keep an eye on the sector spiders, the spider sectors. They are now all rolling fairly strongly to the downside. It is, very evident that all sectors are unwinding except for this one as of yesterday. XLY is the consumer discretionary, still peaking out. You can see here, really extending beyond this upper flag. We could hypothetically come in here and take a look and try to find some other type of flagging formation, but it's pretty clear that the consumers are letting loose a bit right now. And I do believe, like I said, if we look at this on a weekly basis, it's a pretty solid move. I think this is anticipation of Trump's policies, possibly an easing Fed rate, but this is an aggressive move, almost to an overinflated type of market trend. Now, there's nothing saying that we couldn't move into this type of a trend again, but this is a very aggressive move. I think that once this unwinds, remember this is weekly, I think once this unwinds, we're going to be looking at here's November, here's the election. So we have a little bit of a left shoulder ahead, right shoulder, and maybe coming back down a bit. Maybe not all the way down, but it's the one sector right now, consumer discretionary, that is just seems to be unstoppable. Okay, so given that, we're looking at the QQQ headed downward. We're looking at the SPY headed downward. We're looking at almost all sectors headed downward. I'm kind of watching these for a big breakdown, and I'm really watching XLRE because I think XLRE would be a very strong indicator of a breakdown low here, and XLF. I think XLF and XLE, financial sector and real estate, if we start to get kind of a pretty solid breakdown in those sectors, I think it could lead to a more broadening kind of a downward market trend. So we need to kind of see how this plays out. QQQ, again, watching this, still rallying. Let me move this out of the way. Whoops. Still rallying. This is weekly. Go back to daily. And again, as I mentioned, the other day, looking at this as kind of being a fairly overextended market. So you can see here we were measuring from this level here. And again, I like to go off a rejection. So I'll go from that rejection to basically that rejection down to that rejection. And this was our 100% level right here, 1.0. And now we're up here to 1.382. Okay, pretty common level to try to find some resistance. But in reality, we could move up into this 1.5 or 1.618 area here before we run into any real solid resistance. So, but I am watching for a bit of a rollover. Again, I think that the markets continue to revert, possibly coming down and closing this gap window here and moving downward into, as I've drawn into this kind of a channel. So I think we're really setting up for a bit of a reversion. This would essentially be probably about a 3.5%, 6%, maybe a down 6% downside move. Not uncommon. Again, not uncommon in the NASDAQ. Okay, it's pretty common to see moderate pullbacks. This was probably a bit deeper, 12%, 14%. So see, this is our 6.5% little pullback. And here's another one here, roughly from here to here. 6.5% pullback. So again, having a moderate, roughly 6 to 6.5% pullback right over here is not uncommon. Okay, and I think we retest these lows here around 490, 488, 495. These lows, which are the pre-election price zones back over here, I think we're going to roll down and possibly retest these lows before the end of the year. That's what my cycle systems are saying. So again, I would urge you to kind of protect your capital again. Be prepared for a potential rolling downward of the markets. And like I said, we'll see how this plays out. The sectors really as a leading indicator here, we're just watching these to start to break down. So, if I come back over here to weekly, and yeah, I'm going to have a lot of lines on some of these. I apologize. I'll clear them because I can always go back and draw more lines. You guys know that. So you see here how, let's just start at the top. Let's just start at XLE. So here's XLE rolling downward. Energy's about ready to, and I'll drag this over a little bit, kind of about ready to break this lower channel, kind of already has. And you can see here we're moving out of that channel. We either get a base or a bottom over here, maybe trying to come up a little, or we move into deeper reversion where energy could weaken. XLU, the utility sector, broken below this low. We've got a solid anchor bar here, broken below this low, this low, this low, and this low. So we've got a good solid downward trend here taking place. This is again weekly, a good solid breakdown. What we would want to see now is confirmation below wherever this low closes for the week, meaning at this low, we want to see it continue to make new lower lows. And that we're, again, washing out the election level here. If you look back over here and say, where's the most likely support using Fibonacci, getting below this low means we're coming potentially down to this low. That's a pretty good size move in utilities, 11% potentially. Now, from the range here, we could take a look at I always like to go to rejection levels. So from a range target, we could look at this level, 75 roughly, to 73.70 as moderate potential support. Okay, so again, looking for a breakdown in the market. I've been warning about this for weeks. XLK, technology sector, we have the pre-election time frame right over here, October, November. There's the election, big rally up. We have the same type of rejection range. So why am I not rejecting down here? This was an anomaly, rallied back up. Real rejection is right in this area. So come up to this rejection. Really, let's come up to this rejection point for now. That pulls us into the 5-0 or 618 area lows. That pulls us into a potential for a 6 to 8.5% pullback. And that still does not even threaten the most recent low levels down here, which would be a warning of a big breakdown low. Okay, so now let's take a look at XLB. XLB Basic Materials is already rolling. Clear the lines real quick. We're already rolling downward. So we're going to take this rejection area up here to this rejection area here. You can see we've already come down, broken out this low. So this low rejection point, we're going to be very cautious of a breakdown in XLB. The reason being, it's a sign of a slowing economy, just like the transports. We're going to then have a chance of running into this level, moving downward, because once we get below this low, there's not much support between here and here. We could be looking at a pretty good little 6.5% kind of a breakdown. Okay, XLP. Consumer staples, getting a nice flagging formation. You can see it rolling up. There's our excess phase peak pattern below the highs. Okay, we know what's coming next. We're either going to get below this level here, rolling down, setting up some sort of sideways congestion, maybe moving down to the ultimate low, or we're going to come down, find support, and try to rally back out of it. We shall see. This is a weekly chart, so we shall see how this plays out. Given the context of this excess phase peak pattern, the most likely outcome right now, because we have not broken this high, is a breakdown event moving down into this kind of support channel here. So again, why did I draw the congestion channel here? Right in this area, because it aligned with this consolidation range right here. Okay, XLY. Again, consumer discretionary. We've already talked about it. Look at this big rally. Okay, I mean, ultimately, you would want to come possibly off of this rejection point, across this rejection point, extend it out. And again, we're not going to see a big breakdown as long as we stay above this channel. Okay, so think of this as the breakdown point. You can see we've had this big, massive rally, big, strong upward trend. We're not going to get any chance of a breakdown until we get past this point right here. We've got to get past that level, that blue line, to see any type of a breakdown. Okay, next, XLI, industrials. Notice the rolling. Okay, notice the head and shoulders formation here, coming down, possibly rolling. So understand that we've got this kind of a head and shoulders formation setting up here. We've got support down near this area. We do not have an excess phase peak pattern here on the weekly chart. Clearly, we do have this bigger, broader type of a head and shoulders formation here. Mark this as a different color. So we would be watching this level. A breakdown below 133.27, 133.30 would indicate that we have a pretty good chance that we're going to maybe attempt to move back down into this area, trying to find support. So again, markets are rolling. Remember, these are all weekly charts, guys. Communication sector, XLC, Kind of looks a lot like XLP, big rally phase. Remember, you can watch these channels here and say, hey, we're not going to get a breakdown in price until we get below that type of a channel. We do have that post-election head and shoulders potential setup here like this. And that would indicate basically that, this level would be our support channel potentially post-election. And so we're going to watch to see how this plays out. Now, every single one of these have a good solid 6 to 9% pullback potential. So remember, that's why I'm trying to tell you is, I'm not telling you to short everything, but I'm telling you anticipate what is likely to come. If we get an unwinding and reversion phase, we could see a pullback down into these areas here, 93 to 95 roughly, maybe 96. Okay, XLV, healthcare sector, really sucking right now. This is weekly. Okay. So we have, again, a big, broad, possible head and shoulders formation. We are now struggling with this support level. Try to draw a line. It'll be easier than me trying to draw with a mouse. Really trying to hold at that support level. And now, if we break down here, we could end up getting a pretty solid breakdown move. Okay, we can find a little excess phase peak pattern here. I can see it in this move just right here, moving down into consolidation potentially and moving down to try to find an ultimate low. Maybe this is it, and maybe we roll into that right shoulder area here. We'll have to see. But again, we're moving potentially down below this support level. We're getting very close to a potential breakdown. Okay, XLF. Again, same type of setup. I showed you this earlier off a weekly. Here's the pre-election left shoulder, the head coming back over, possible right shoulder. So we would be looking at potentially this area here as kind of a neckline. And again, look at where we have potentially to move down to on a fairly broad unwinding support level. Now, this is not, uncommon to see this type of a pullback, 10, 15% in a market. I mean, look, if you think this is, oh, Brad, this seems really, really unusual. Yeah, well, look, 2022, we had this big, broad market collection or correction. This was essentially a 23% correction. COVID hit. Now, in a general market trend where we get, pretty solid market moves, 2018 here, 23%. Here's another move down, very aggressive, 25%. So again, they can happen. It's not unusual to see, 16, 18, 20% pullbacks. And why I think this is going to happen is A, you got the end of the Biden presidency coming, and who knows what he can do. Who knows really what the Fed's going to try to do. And we have a lot of proposed austerity measures, cutting government, and the potential of a government shutdown setting up this week right before Christmas. Wow, couldn't have they have timed that any better? So again, we're looking at a whole, host of potential issues here. I think that's why it's important to understand why we need to hedge. And then lastly, we'll take a look here at XLRE. Again, I talked about this. Try to clear everything, draw again. You can see we've got this very clear move here into an excess type of phase, peaking pattern, stayed away from the high. We are breaking down. We're about ready to break below this low. This means we would move into consolidation. The closest area I can see for consolidation, I mean, really look at this. We have this deep low back here in 2023. We have moderate consolidation range here. If you take a look at from this area up to this area, which is where rejection would be, I can see consolidation either being in this area or down in this area, which is the 38250 area. then potentially trying to break down maybe into this area to find an ultimate low, or maybe down in this area to find an ultimate low. So really, it comes down to where we believe the markets may end up going. So at this point, I'm very concerned that we're going to get this breakdown to the downside, and I've been trying to warn you guys to prepare for it, which is why I've been highlighting this. Wait till all my stuff loads. Go back to daily. Which is why I've been highlighting this. Okay, where is it? Okay, I don't know where it went, but there was a hedge. Maybe it was over here on QQQ. Yeah, hedge. So this is your warning here. Topping, rolling. I believe we're moving into a consolidated reversion phase. And as I showed you back over here on the QQQ and the SPY, I think we're going to be looking at a downward trend that's going to set us up right back over here into this mid-January to mid-February base and bottom based on my cycle analysis. So again, you can see here, this is kind of what I think is most likely to happen here based on my cycle analysis. So we're going to go from this to gold. Oh, there's my cycle analysis. Where is it? How come I can't get to gold? Okay, we come in here, gold cycle patterns. There's gold. Let's come down over here and go take a look at gold. Right over here. So gold is setting up a breakdown pattern in carryover mode. We are still in bullish trending. We are still in warnings price move. I mean, gold is setting up a base here and a bottom. I talked about this last week. I really do believe that gold is struggling to make a big move back to the upside. I think that's coming. I think it's very smart for traders, especially long-term swing traders, to take advantage of these lows in metals and miners. I think you're going to be very pleased come January, February of next year, seeing gold and silver much higher. But again, this is a 4-hour chart, and this is a 4-hour chart for silver on the right. I believe we are looking at a broad kind of a basing formation here, looking for a rally phase back up. Same type of scenario here. Would not be surprised to see gold start to make a move ahead of this crush rolling momentum pattern here. Maybe 2 or 3 more days of rolling before I think we're going to be into some sort of a bigger move here. Now, these crush patterns, like on Friday, can become very, very big movers. So if we get a crush move to the upside, oh my God, it's off to the races. If we get crush moves to the downside, it's not going to be pretty for gold. So again, I would urge you just to really stay cautious and prepare for some real volatility here. I mean, we are in this trend, and I really do believe that we're looking at a base bottom here. Okay, looking to try to roll out like I drew earlier. And that's what I think we're doing here. We're looking to try to roll out and up. I think that is a very logical outcome for gold and silver right now. Okay, I think we're just going to try to move back up into this upper channel and back up into this upper channel, $33, $32. $33 roughly, and up here $27.60, $27.80, maybe higher for gold. So we'll just got to wait and see what happens here. Lastly, we go back over here to Bitcoin. Come back here. 104,750. This is a daily chart, rolling very strongly over here. Ran into a lot of resistance. Let me go down here to a 4-hour. Ran into a lot of resistance on at this 106,500 area. You can see that it rejected back here, rejected right off this channel, back down into the middle area of the channel. I would suggest, though, that we are about to set up another excess phase peak pattern, rolling potentially into consolidation, and then attempting to break down into a consolidation phase and attempting to move potentially lower from there. Now, consolidation could either be off of this low as I've drawn, or we could get a big breakdown here and then eventually move a lot lower to the downside if the consolidation phase resets back here off of this low back in December. December 10th. So again, we're looking at, we're in this channel and we could be setting up an excess phase peak pattern. We've clearly run into resistance at 106,500. We're looking at a potential rolling pattern downward here. It's hit every single one of my numbers and it's rolled through. Granted, I'm not saying I'm perfect at this. I'm reading these charts for you and trying to give you some very clear interpretation. But remember, guys, we are still in, I'm going to try to highlight this as bright yellow. Look at this, guys. We are still in this extended channeling flagging trend. So you can see I've drawn it with this box, and I've tried to draw it out for you to show you that we're in this big, broad, extended trend here. And I believe that we're going to stay within that channel until we break out of it. We have yet to break out of it. We're consolidated. We're likely going to set up an excess phase peak pattern here. And this could be dangerous to the downside, but we don't know yet. Right now, channeling between 106,500 and 103,700 is the most likely outcome. Now, any breakdown event's going to run into support right over here. I'll mark this level here, dark green. We need to be aware that previous highs and lows are what we look for with Fibonacci price theory. The reason we do this is because price tells us everything. So we're looking at, again, if the markets kind of consolidate, I think we're going to be looking at this 99, 100 area again pretty quickly if they consolidate. So we'll see how things play out over the next couple of days. But remember, you need to be very low allocation. This is not the time to go crazy trading. Yeah, I mean, intraday you can do okay. But, the markets are going to get very flat. Oh, there's my other server. Come back here. So the markets are going to get very, very flat. And again, that's it for now, guys. I'll talk to you later.